Hello, everyone. It's Michael Jaco with Unleashing Intuition Secret Stock Market Armageddon. We're here. Looks like the bond market is doing it, signaling the same problems that we've seen in the past are happening in the bond market, which leads to a market collapse. Now, whether that will be a long-term, deep market collapse or whether it will be, like we saw back in April, a little, steep decline and then a fast pullback. We hit lows of like 35 in the I guess the markets as far as like the fear index, and then we're up close to 100, where we have a lot of people thinking that we're in extreme greed. Extreme greed. You can look at it, and we're going to show you guys all this right now. So this is what the show's focused on because it is highly important that you get this, because if the economies of the world collapse, that changes, everything. And we know that it's coming, and we know that it's going to cause a lot of problems. But being, informed and ahead of it is basically one of those things that keeps us, ahead of the curve and basically out of danger, out of damage. Okay, so let's look at a few things. So Warren Buffett, of course, is pretty much completely out of stocks. I think he owns one stock right now, but all pretty much completely out of stocks. So let's look at that. He's mostly in cash. So whenever he's done that in the past, that is an indicator. Now he usually gets out long before the stock market crashes. So you could say, well, there's more to go, and that's fair. But you have to be aware that Warren Buffett, through Berkshire Hathaway, has been a net seller of stocks for several consecutive quarters, including Q1 2025. This reflects his cautious approach in a market where finding attractive valuations has become challenging. Berkshire Hathaway's cash and treasury bill holdings reached a record high of $347.7 billion in the first quarter of 2025. All right, so Citigroup, now he's gotten out of the banks big time, guys. So we have talked about the banks, failing massively in the future, and they will. It depends on, how quickly. Citigroup, Berkshire completely exited its position in Citigroup, selling all remaining 14.6 million shares. New holdings, NU, Berkshire also fully exited his position in Brazilian neobank New Holdings, selling all 40.1 million remaining shares. Bank of America, Berkshire continued to reduce its stake because he can only sell so much because he had so much of it. So now he's reduced it all the way down, representing 7.2% reduction. Buffett has been consistently trimming his position since mid-2024 when we started reporting on that. Right when he started doing it, possibly due to valuation concerns. Yeah, because it's going to go way down. So other reductions, Berkshire also reduced its holdings in several other stocks. So on and on, T-Mobile, lots of other ones. So it's important to note that despite these sales, Berkshire Hathaway remains in significant positions in several of these companies. And Apple remains Berkshire's largest holding. So he's basically staying in Apple. He's holding that long term for the most part. So this is something that you have to be aware of. The best caller of stocks probably in history. Now, one thing that Mr. Hathaway has been, or Warren Buffett, I shouldn't say Myth, is at this company. So Mr. Buffett has been very he's tried this many times, and he's got spanked. Just like the Hunt brothers, when they tried to play the game that the U.S. government and banks and all that have been playing as far as controlling the silver price. So the Hunt brothers back in the 70s basically came in, and they started selling derivatives, and they cornered like a quarter or more of the silver market, and then the federal government stepped in and said, "Oh no," and they spanked them. And so we had a spike in silver prices up to about $50. Warren Buffett has gone into silver as well. Now, his father had a dream that we would be in silver and gold for our currency. And I think that Mr. Buffett has the same ideals, but he has basically every time that he has gone in to silver, he saw, because we're basically right now getting a Buffett silver indicator. So every time that he has wanted to go into, or he did go into silver, and he owned like quarter of the silver market himself at one time, and then he got basically told about it, right? And so he had to sell off his holdings he didn't lose anything, but he only made like 500 million, right? $500 million. But he was standing to make a lot more. So of course, the federal government, I'm not the federal government, but the Federal Reserve, because it's not federal, it's not part of the government, it's a private banking institution. So they came in basically through their intermediaries in the banking and the government and so forth. Basically told him what to do, and so he backed off. So we're having the same $1 billion buy signal right now. Now there are billionaires out there that are buying now, and they've talked about it. They have pallets and pallets and pallets of silver. All right, so they don't have the same problem. They're not buying as much as Buffett did, but they stand to make multi-billion dollar with $1 billion investment, and you're going to see silver go up 10, 15, 20x. These guys are going to make quite a lot of money, and wherever you're at, if you can barely afford several dozen ounces of silver, you're going to be a thousandaire, right? If you have thousands of dollars of silver, you're going to be hundreds of thousands of dollars in silver when this thing's over. You shift it over to gold. Gold takes another hike higher. So it's going to be a very, very amazing time. 50-year. We haven't seen the possibility of making investment profits on silver at this level for 50 years, right? Maybe even as far back as 100, because the manipulation of silver has been very, very long term. And as this manipulation comes off, which it is, and it will, it's going to go high, and it's going to stay high. So that's where we're at with, the Warren Buffett. Now there is someone that called the stock market crash in 2008, and that's Michael Burry. And Michael Burry is back again, saying that we're in that zone of market crash once again.
Michael Burry recently made his biggest short since forecasting the 2008 crisis and the massive drop in the S&P 500. With his renowned reputation, we're definitely paying attention to that. Not just to that, but also to the fact that the globe.
All right, so globally, we're probably going to see this collapse happen, and it's moving that direction very quickly. Now, Michael Burry, he is, everybody watches him, so it's been since 2008, right? So we're almost, 18, almost 20 years since he made that famous call. Actually, probably about 20 years, because he, just like Warren Buffett, was a little early. Now he's a little early in his call on this market crash, because it was last month when he started to make the call. I'm getting out of stocks. All right, so let's look at some of the things that he is saying right now. All right, so Michael Burry, as you see here, why Michael Burry just sold all his stocks. Michael Burry correctly predicted 9 of the last 3 recessions, and so there's lots of I'm scared. Michael Burry is getting out of is betting against the market. 7 big moves in Michael Burry's portfolio. So you see here he's with Warren Buffett. So Michael Burry, Warren Buffett, they're exceptional. Now you might have seen the movie The Big Short. That was about Michael Burry. So he's doubling his stake that he had back in 2008. So he's doubling down this time. So he sees this market crash that's coming as it's going to be even more ferocious, more like Armageddon than we have seen probably even in 1929, guys. And that's my prediction as well. And I've been saying that for a couple of years. It's time to start getting out. And pretty much close to the time frame where Buffett started coming out, I also said that housing was going to collapse, and a lot of people, took my advice. So what's going on? Let's go ahead. Let's look at some of the things that show us that are the true indicators, and that's the bond market. So when the bond market gets wanky, that's time to really be concerned. Bond market sends troubling signal on inflation that should concern investors. Treasury sold off on Tuesday after the June CPI report. The reaction to Tuesday's consumer price index for June included a bond market sell-off that sent the 30-year yield above 5% to its highest level since May 23. Right. So it talks about that, and of course, I look at the 10-year, the 30-year rising the way it is pretty much 10-year. All the bonds are going up, but they're going up around the world. So after the release of the June CPI, it seemed like initially the reaction in the bond market was much more muted. But now we are seeing, this is usually the way it works, actually. It's like a whisper. That was really bad because people try and, the financial markets and news and so forth, they try and sugarcoat it, and people don't get it at first, but the smart money does. The smart money is like behind the scenes. It's like, okay, the dumb money is not getting out yet, so let's start moving our positions, and let's slow roll this and get out as much as we can before the panic starts. So that's pretty much where we are. So we're going to probably see a pullback, a pretty decent one. And like I said, whether this is the big pullback remains to be seen. We may still get another bounce in there. Bitcoin, I think, didn't quite reach the level that I thought it was, but that doesn't mean it was close enough. It almost touched it. So, and that number was 125. It hit 123 plus. So it kind of crept up on it, and then it pulled back. Now, whether this pullback is just, weeding out some more weak money and getting the extreme greed indicator down to a more normalized position, and then another run for higher numbers. It's, I just watch every pullback. I anticipate this could be the one, but I am aware that there's tremendous manipulation going on, and this will be the last pump we'll see in the stock market for probably, 10, 20 years, guys. So we won't see these numbers again. Just like in 1929, it was like 25 years later before we saw the same numbers in the stock market peak. So we may see similar things happen this time. So that's one thing to be aware of. But obviously, a lot of people made a lot of money during the Depression. It gets harped and ramped up to being horrific. Yes, it was bad because people were still trying to make the old system work. The old system that had benefited everyone for hundreds, maybe even thousands of years, and then the Federal Reserve came in and manipulated it. So people had to adjust to the new manipulation that the Federal Reserve brought in, guys. And they're the ones that caused that stock market crash. And they're the ones that caused the 2008 market crash. And they're the ones that caused this crash that's coming. They are the ones. So I would say that if President Trump were to do something that would be long lasting and he would be remembered forever, that would be to do away with the Federal Reserve and go back to, the Department of Treasury. And Department of Treasury is really the federal government's money. And go back there, make the gold and silver. I believe that we're really going in that direction. But that remains to be seen. All right. So whether it be soon, whether it be some other time, will people look at this and go, that Federal Reserve really sucks bad, right? Just like we saw with the last administration. Most people are saying they did some really horrific things, and people are getting it now. So a lot of us have been warning about this for a long time, but sometimes you have to experience bad before you actually understand it. All right. Kind of like when I went through Hell Week, people talked about, as a Navy SEAL, people talked about how brutal and how tough it was. And I was like, yeah, that sounds really bad. And then, but once you experience it, you're like, yeah, no one can explain that. And that's the way this market downturn is going to be. There's a lot of people going to experience this. I don't want to experience it. Right. So I position myself, of course, in silver. So let's look at the futures. The futures are down across the board. Silver is still got some pressure on it. Silver is getting ready to explode upwards like never before. US 10-year, this is the one that we want to look at. So when you see it pumping like it is right now, let's go back 6 months. So every time it comes up to about, this was, let's see, back in April. So back in April, we saw a big downturn, 4.49. So wow, look what we're at, 4.49, right? So every time we start hitting these highs in the bond market, there's usually a pretty decent pullback until, like here, looks like the Federal Reserve came in and started buying and kicked it back down. So that massive pump, and that was the Japanese bonds. So what's happening with the Japanese bonds? That is, maybe causing this problem as well. Well, here they are, Japanese bonds. 6 months on the Japanese bonds, and at that time that was off. The Japanese government bought it. Everything turned back around. So remember, 1.592. Where is it right now? 1.595. That's even more. So what do you think is going to happen until the high, the day range right now, and this is going on right now in Japan, is 1.596. So either the Japanese federal government comes in pretty significant. Now, happening on and looking at the China as well. Now let's look at that. The bonds of all, but have a problem in the Chinese. We expect to accelerate in the second half of the year. That's where we're at now. And local rates will be falling more quickly, with deflationary pressure likely to deepen. China's 10-year government bond yields could fall to 1.3% by year end versus the current level of 1.66. All right, so across the board, China, the second most, highest economy in the world. Japan, I don't know, maybe they're third. They used to be number 2, but I think now they're third. So when, like, going to cause a problem around the world, right? And we're right on the cusp of that right now. So let's look at a little quick video. China, what's going on in China?
Market is collapsing in real time. Yields are skyrocketing, investors are dumping everything and running for their exits. We're watching the foundations of the world's second largest economy begin. If this continues, the consequences won't just stay in China.
So it's happening pretty much around the world with the bond market. So Japanese bonds tumble as fiscal worries mount before election. So this is Bloomberg today, or Monday, and the slump in Japan's long-term bonds. So it's worse today. So we talked about it on Monday, and it got worse. And of course, stock market pulled back almost 1% today. The slump in Japan's long-term bonds intensified Monday, pushing yields sharply higher in a move that puts global debt markets on alert. Global debt markets are on alert. So, hello, Mr. Jaco. How old are you? How are you? Right? Not how old are you? Could you please give me some advice? Should I start getting extra food and items for blackouts in Australia? Thank you for your help and all you do for the population. So, I don't know haven't looked at Australia. I think it's going to be a worldwide problem if this stock market does actually take it. But it's always good to have extra, around. I think worldwide we're going to get some kind of pullback and maybe some little blackout. You guys down under you're into your winter period, so yeah, definitely you want to be in a position where you can handle any kind of pullback. So, amid signs of thin liquidity and increasing worries about higher government spending in Japan, yields on bonds from the 10-year to the 40-year spiked, as I showed you guys, in recent moves, reminiscent of the surge that rippled through global markets in April, May. All right. While the pressure in Japan is being heightened by the looming election, Japan's 40-year led the way with a slump of 17 basis points. It's quite significant. All right. So, government spending is huge. Basically, what is going on in Japan, and they have an aging population. So the elderly need, their equivalent of Social Security payments, medical and all that kind of stuff. And Japan has a falling birth rate. So there's not enough people coming in to keep that Social Security and, healthcare to the level that it needs to be. Kind of the same thing starting to happen in America as well. So that's something to be aware of now. I've been saying I believe there's a possibility that AI can reverse a lot of this, take a lot of pressure off this. So, of course, the old school guys are trying to bring in Europe, which also has a falling birth rate. They're trying to bring in a lot of illegal aliens to cover that loss, but that's stupid. That's stupid, of course. That's pretty typical of liberal communist mentality. Usually do stupid and then it collapses everything. So Japan's bond market is indeed facing significant pressure, with yields on long-term government bonds surging to multi-decade highs. Soaring yields, weak bond auctions, potential policy shifts. BOJ, Bank of Japan, is facing pressure to normalize its monetary policy, including potentially ending its yield curve policy and reducing its bond purchases. So you saw how those spikes had a massive fall off in Japan and in the U.S. So the Federal Reserve comes in and buys them. The Bank of Japan comes in and buys them. China comes in and buys them. But it raises inflation, because basically you're printing money, that's always inflationary, and you have nothing to back it. It's like this pin right here. You need all these pins to, and you can trade these pins for, eggs and so forth. And there's only so many pins. And then everybody's like, oh, that pin's worth a lot of money. And then secretly I start printing them and giving them out to all my cronies and so forth. And then all these pins start to show up, and then the economy collapses. Kind of like in Germany, in the Weimar Republic, where they had a wheelbarrow full of money for a loaf of bread. So that's where most economies are going right now. Japan has a massive public debt, with a debt to GDP ratio exceeding 260%. Japan's aging population is putting strain on the government's finances and social security system. Waning demand. Traditional buyers of Bank of Japan's life insurers, so forth, are facing financial pressures and are less willing to hold long-term debt, because they're seeing that it's going to be worthless. It's going to be worthless. So we're seeing a massive move out of a lot of those bonds. So no one wants them. No one's buying them. And that's kind of where we are right now. All right. So let's look at, some of the market indicators that we saw today, and try and digest and decipher what's going on there. All right. So let's look at the trading view, and I'll kind of break some of this down for you. So here's the trading view for today. So this was back in, as you see here, in early April, where we had that stock market, downturn that didn't last that long. So we had extreme greed in this area right here, up here, and then it fell to extreme fear. And now it's back up to extreme greed again. Now, as you see here, the stock market, the Dow Jones did not go to its all-time high. Now, the NASDAQ and S&P broke above their all-time highs. Now, I've said this many times, when you have gaps, they have to be filled, right? So you see here where there was a gap up, it came down and it kind of filled that, maybe not completely, but as it goes up, you see this gap right here. So this is the stock price when it closed, and then when it opened, it gapped up. So this is a gap that was not filled, or actually it was filled. So right here, you see it filled, and then we go up, and then we have right here. So you see this gap? That's a gap all the way back at 42. Let's see if I can pull this out. It's being stubborn for me. There we go. All right. So you see it, this other gap that hasn't been filled is back here at 42.6. That's about 3,000 points difference, right? So we could see that get filled. That's a possibility. But on the NASDAQ side, so you see it's going to bust through a lot of things. I think it gets about right in here. It fills that, probably goes below that 200-day, pops out a little bit, and then goes back up. So that could be. Now, if it goes below the 200-day, we really have to go back in time to see where it goes lower. So we went below the 200-day here. So that red line right there is a 200-day. All right. That's a 100. That's I think the 12-day or something like that. So, or maybe 50 days. So you have to go way back. So you see where it's below, and then the support, and then market problems happen, and you see a crash, and then came and bought with a 2002. Let's see, he actually broke, stayed for quite a few months, and we here you can see the gaps down. It basically did low, stayed high, kept going high, and it kept going high, and then it disappears. All right, there we go. So I couldn't. Let's look back out. But there it doesn't play. Get have to be filled, and if they don't get filled, then as the stock market goes up, at some point it's got to come down and fill those gaps. Now, the first gap that we have, as you see here, this gap right here at 21.87. So right now we're at 22.8. So probably 1,000 point. I would say we're probably going to get 1,000 point pullback to that point, and then we'll see. Because you see, there's a lot of, that level right there. It stayed there quite a bit. So there's a good floor right here. So we probably will come back down about 1,000 points on the NASDAQ. But as you guys can see, there's a lot of gaps down here. Look at this gap right here. This gap is all the way down to 20, 22. So that's about 2,000, 600 point, about 600 point. That's a long way. You see right here, that's a gap, but it got filled right here. So it came down, filled out, and then it took off. So you come all the way down to the last gap. So it crashed down. That was a low. And this was a very weak test right here. It's close to that, and then it takes off. So then we had that explosion that really effed up a lot of shorts. You have that one, and then you have that one, and then you started having gaps on the way back down to test, and then it started to go back up. So look at this gap right here. It hasn't been filled. That's a long way down. So look at this gap. Hasn't been filled. So that's 20. So that's 20. That's 2,000 down to that one. And then we need to fill this one at some point. That's 4,400 from its current high. That's a long way, right? So that's a lot of percentage move. So at some point, this is going to get filled. This is going to get tested because that was a weak test. And we may see if it goes down, it tests this old low. I don't know if it's going to do it this time. I think it's probably going to fill up at least that gap. And maybe they'll come in and buy, the bonds. The governments will come in and buy it. And then it'll start going back up. So it may come down. I think we're going to get at least a little bit of a pullback. And then we might take off higher again. Now, Bitcoin has pulled back from its high. Also, you see that red spike right there. That's a lot of volume on the way down. So a lot of people came in and sold Bitcoin. And that could be they're just they want a better buying opportunity, or it could be because they had they were supposed to make some kind of decision in Congress today, and they decided not to do it. So that kind of made Bitcoin over the last couple of days sell off. Could be just, and then they come back tomorrow and they're like, oh yeah, we'll do this with Bitcoin. But one of the things they're trying to protest is for the Federal Reserve to have the possibility of coming in with their own cryptocurrency type thing. So we don't want that, right? So that's what they're fighting about, I think. And of course, the Democrats want it, but the Republicans don't. So that's the problem. So we don't want the Federal Reserve that was voted in by the Democrats. They want to get the Federal Reserve to have its own, coin or whatever, and that will take away all the benefits of all the Bitcoins out there, and all the it'll basically be nothing, right? If the federal government comes in, the Federal Reserve that is, and has their own crypto coin, right? So not going to happen, I don't think. But if they do get that, that's not going to be good. That will destroy all of Bitcoin pretty good, right? And XRP, it's kind of floating up around its high. Probably get some decent pullbacks in that. So it pumped pretty good. Usually you're going to get a pullback. So that high that we had back over here, and here the all-time high was like 340 or something, whatever it was. It looked like it was trying to get that, and that's probably going to come back and test, I would say, at least 265, something like that, and then maybe find some foundation there at the minimum. There's a lot of probably a lot of resistance here at the 223 level. But if everything collapses, which I'm kind of skeptical it's going to be a complete collapse this time. Not yet, I don't think. I think probably closer to the October timeframe, we're probably going to get a decent pullback, guys. And then they'll probably come in and just buy everything like they have in the past. And we'll have a turnaround, right? So this could be a point where you make a little money on the way down, make some money going back up. Or it could be the time where the Federal Reserve does go away, and who knows? Will silver really take off then? Silver is going to take off regardless, and the levels that silver are going to hit it's going to blow me away, right? I have some high numbers, but I firmly believe that silver is going to be just stunning. The rate that it goes through. This is Mike Maloney. He has this one, basically has this one presentation. So he has a gold to silver ratio throughout time. So I took all these numbers and I found the average. So all the way back in ancient Egypt, we're talking, what was that, 3,000? So we're like over 5,000 years ago. That's gold, that's silver. So 3-1. And then throughout time, you see 9-1, 2-1. That was 2000 BC. 4,000 years ago. And then you keep going back, Caesar time, 1-8, Greece 1-15. Looks like Alexander the Great time frame. The Renaissance time frame, 15-1. That's 15 ounces of silver to 1 gold. Japanese, when they excelled in 1500s, 5-1. I don't know if that's excelling, but anyway, 5-1. And then you have 14-1 in France, 1400. Germany, 10-1, and all the way through. So U.S. 1792 during the Revolutionary War, or right after, 15-1. So pretty high numbers, 15-1 when you look back in ancient Egypt, which was the most stable period. Funny how we have all that Egyptian stuff with the Shriners and the pyramids and the obelisk and Washington D.C. and all that stuff. It's very interesting, right? So very interesting. So I took all those numbers, and the average is 10.63. We'll up that to 11, round it off to 11. So 11-1, throughout time, throughout history, guys. Now look what we just recently had. Now it's pulled back a little bit from this high, this clown high, but we had 105-1. There's been no time, as you guys can see, anywhere in history where it was anywhere like that. So the manipulation, like I have been saying, and many of us have been saying for quite some time, is catastrophic for our economy. Eventually, we're going to find out. So if we had the gold to silver ratio right now at the historic level, 11-1, silver would be $305 per ounce, right? So right now it is equivalent of about 88-1. So we're going to see this thing probably turn around pretty significantly. We're going to see a massive pump coming in the near term for silver. And so you should have some silver on hand, should have cash on hand. If you're near a water source, then have some way to purify that water. You should have, of course, food, lots of food. I like protein. So I have lots of beef jerky, and I have big jugs of protein. I've talked about that for years. There was a time where I had freezers full of meat, and then I got hurricaned with Helene. Then I was like, screw this, I'm out of here. So we're having, I think, we're going to see some catastrophic flooding in Florida this summer, unfortunately. But how much should you have, Ed Gray? So that's dependent on you. What can you afford? And what's a level that you would like to have as far as silver? Would you like to invest? If it went to 150, which it's going to do easily, how much ounces of silver could you afford right now at 38? It's at 38 right now. Of course, you're not going to get that. You're going to have to pay a little bit more. If you go to a dealer or something like that, you're going to be a little bit over spot for right now. At some point, that spot price, if silver's like 30, imagine it, because I've seen it like this, silver will be like $38, and then you have to pay $250. I've seen it like that over spot. So you'd have to pay $40.50 for a $38 ounce of silver, because that's what you're going to pay if you want it. All right. So it's just a little bit over spot in a lot of places. So you can get a lot. What I like is basically, because I have a pallet full of it, right? I don't have like a billionaire where I've seen the billionaires have like 8-10 pallets of silver. I don't have a full pallet, but I got kind of close to a pallet worth of silver. So, but that's stored somewhere. That's stored in Texas, at Texas Depository. So I do I trade with Dr. Kirk Elliott, KEPM.com, Kirk Elliott, preciousmetals.com/Jaco. Or if you want a free consultation, or you put in, you can go in and have a request for a free consultation through email to put in your information. Then they'll get back to you. But if you already have, a lot of silver, that's great. Imagine what you're going to do with that silver when it goes up in price. Pay off all your bills, pay off your mortgage, have a lot more money, maybe buy another home and like rent it out, whatever. Or maybe buy a business and become independent. Focus on LifeWave, right? So LifeWave is, helping to make a lot of people independent. So that's one I would recommend, and you'll help a lot of people with it. So the X39, we're just talking to a guy that's pretty well off, but his wife is 1 foot in and 1 foot out of the grave. And we were talking about the water machine that's coming, the X2O, which is basically going to like bring light as you drink the water, brings light into your body. So everybody's really excited about that. He wants that for his wife. We would love to get that for his wife, but unfortunately, still not quite available. Maybe September-ish now. And but the X39 definitely is helping a lot of people. So we're going to get his wife on that, and hopefully she gets some good results. So yeah, X39 every day for the rest of your life. So X39 is the mother of all patches. So it helps better sleep. It's a copper peptide, which basically activates you. As you see on my shoulder right here, I had a shoulder injury, so I patched up, and we call this wallpapering. So I have a Eon, I have my energy patch, I have a carnosine, and I have an X39 there. So when I put those on my shoulder, I couldn't like lift my shoulder because I like tweaked it. And as you guys can see, right after I put it on, it's like, woo! So it's good. And so it's pretty amazing, the results you get from the patch, right? So I love the patch. I know a lot of you out there love the patch, but the patch can help everybody. And I'd love to see everybody on the patch. That'd be great. All right, guys, lots of love. Stay in the love vibration. Watch out for that storm that's going across Florida right now, causing a lot of flooding, and it's going out into the Gulf. And we got a lot of warm water out in the Gulf, deep warm water. So probably Deveray, how long you been on the patch? So keep wearing the patch. So you should wear the patch for every 10 years of life, at least a month. I've never seen anyone that wears the patch over a period of time not have amazing results. All right. So possibility, Orleans, New Orleans, Louisiana, getting a pretty significant storm, maybe even a decent hurricane. Heads up on that. Storm picked all around the world. North Carolina and area. They had that went across Florida again, and coast, and then went in South Carolina, went up the coast a little bit. Did a lot of flooding in North Carolina. They're saying like 5 to 1,000 year flooding again in North Carolina. New Jersey having a massive flooding. New York, weather manipulation around the world, on top of solar activity that's coming in and basically heating up our world electrically, right? Not necessarily heat-wise, although it's kind of warm everywhere. Not here, right, where I'm at, Lake Tahoe, but pretty much the electrical energy is heating up things, that causes storms, because there's volcanic activity. Japan, still like these islands are out there where that one person that predicted, I think 14 out of 15 events in Japan, one of them being Fukushima, that big tsunami. She's predicted there's going to be a big one in Japan this month. So that would be devastating, of course, because that size tsunami that she's talking about would devastate a lot of the Pacific, even the North, or not the North, but the California and Oregon and the West Coast of America. So it is pretty powerful. What's going on in the world right now? Massive earthquake, volcanic activity, I believe, is coming. We're just getting started, and of course, the deep state is like ramping that and causing a lot of destruction that is already coming, but they're just jacking it up even more because they're not happy because they're going away. They're not going to go away quietly in the night, right? So lots of love, stay in the love vibration, and we'll see you guys next time.